Good afternoon and welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the MarketSite is Jay Gragnani. He's the head of research for Nasdaq, Dorsey, Wright, and we are wrapping up Q3 with a look into Q4. Jay, as always, thank you so much for joining me at the MarketSite. There's a lot of main events and milestones going into Q3. Let's review some of them.
Yeah, absolutely. It's hard to believe we're sitting here talking about Q3 being over, but absolutely we're heading into Q4. And Q3, as we look back so far, the first 3 quarters of 2018 have been strong for the equity markets. You see a lot of strength there in the equity markets. The big question now, I think, on a lot of investors' mind is how is the rest of the year going to play out? How is the fourth quarter going to play out? And when you look out there across the board, September has bucked a lot of trends in many ways. September historically has been the worst month on record for the market, and we're finishing the month of September on a positive note, which is certainly bodes well for the market as we head into October and then ultimately November and December. And one of the things that we're watching out there in the marketplace, there's a lot of news, a lot of geopolitical, economic events that are happening. We've seen the Fed increase interest rates, obviously with the end of September meeting there, so that has happened. The next question, will there be another rate hike at the end of the year later on through the end of the year? So that's something that we're going to be watching. How investors are reacting to that news is going to be certainly very, very important. As we sit here and look at things today, the trade wars, whether it be in Asia with China or just to the north of us with Canada, that's going to be a continued event that we're watching out there in the marketplace, or that many investors are going to watch out there in the marketplace. And it's going to be interesting to see how investors react to that news. So far this year, the news hasn't changed. Those concerns, the geopolitical risk have remained the same, and the markets have continued to be resilient. And right now, when we look out at the markets as we end Q3, roll into Q4, U.S. equities in general continue to be the top-ranked asset class that we're looking at in the marketplace. International equities is right there, sitting at number 2. And then interestingly enough, commodities. Commodities has been an area that we'll continue to watch. They're sitting at the number 3 position asset class today.
It seemed as if investors took on a little bit more risk for Q3. There's a number of stock-specific stories out there that reflect that. Would you say that investors are looking for more tradable events right now, or they want to look specifically for longer-term investments?
Certainly. And, you know, this year, really, there has been a continued shift or continuation of 2017 of more risk-on type of investments having carried the day. When you look out there at the marketplace and you see growth-oriented companies, technology-oriented companies, even some subsectors, things like biotechnology as a group, those are areas that have really performed well this year in terms of not only absolute performance, but also relative performance in terms of their leadership position in the marketplace and how we view the world. And so when we look out there, the big question is, are those risk-off type of areas going to come back into favor? And you think traditionally about risk-off areas, so things like value-oriented stocks, big dividend-paying type of stocks, or even in other asset classes like U.S. Treasuries. Those areas right now, we just haven't seen a shift into a lot of those areas. We've seen some mean reversion from some individual sectors, things like utilities as an example, a mean reversion, but by and large you haven't seen investors willing to flee away from the risk-on type of areas in towards the more risk-off type of areas just yet.
Let's go back to interest rates. What were your thoughts around the FOMC meeting this week?
Yeah, sure. So we saw the Feds certainly increase rates. I think the uncertainty of whether they're going to increase rates one more time before the end of the year, I think caught some people a little off guard. I think there was certainly a perception out there, and you look at some of the polls and the studies out there in the marketplace, and I think a lot of people were expecting that interest rate hike that we saw as well as another one.
Right.
And so I think it caught a lot of people off guard, but you look at the markets and they're reacting positively as we're recording today, but certainly acting positively by and large across the board. So not a whole lot of news or a reaction to the news that is seeing any adverse effects on the markets.
Right. I mean, the Fed's been really clear in terms of telegraphing its message, so I would agree with you there. What are you going to be looking for going into Q3 earnings season? Because Q2 was quite spectacular. The numbers were really good from the corporate side.
It absolutely was, and if Q3 earnings season can match the previous quarter, I think we're in for a strong end to the year. But we'll certainly see. You know, we enter in earnings season right now, and oftentimes you can get a lot of individual companies that have earnings surprises to the upside, as you saw last quarter. The other side of that is there will be landmines out there. You know, things will happen. companies won't meet expectations for whatever reason. But by and large, what we're going to watch and what we're going to continue to monitor is how do those earnings news, the reaction to those news affect the charts that we're looking at today. And even through the course of the first couple earnings cycles this year, we haven't seen any adverse effects from that. U.S. equities continue to be strong. Even a lot of names that pulled back as a result of earnings, they pulled back towards what we would consider to be more normal levels in the market. And so as we're entering the earnings season now, there's lots of different ways that you can do it as an investor. If you're concerned about earnings season, there's certainly ways to protect or hedge individual stock risk through options. As an example, you could buy protective puts on individual positions, and that's certainly one way that will allow you to protect some of the downside if you're concerned about a company missing their earnings or you're concerned about the market at large pulling back a little bit. There's lots of different ways through options and through different strategies like that you can use to hedge in the portfolios.
All right. Well, thank you very much for joining us at MarketSite. You'll be back here in December before you know it, I'm sure.
That sounds great.
All right. And thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.